And today we have with us Mr. Kishor Patil, the CEO and MD of KPIT Technologies. Good morning and thank you for joining us today. I'll start with taking your views on the inline numbers that you've reported for Q1.
Yeah, so good morning to you. See, we have, let me just put it in a right perspective. Year on year, we continue to grow by 24.8% in constant currency, the revenue year on year. And the PAT has grown 52.4% year on year. So that's a pretty significant growth in the current environment. And if you look at the EBITDA percentage, we are, as you mentioned, it's a little higher than the last quarter, in spite of additional expenses in terms of ESOPs, which we have given during the quarter. So overall, we have been in a position to achieve margin expansion during a difficult quarter. Year on year, EBITDA growth has gone up by 31%. So this is the 16th quarter of continuous growth in profit and top line. And the key point I may want to tell you is in this 16th quarter, our revenue has gone up by 2.5 times, and the profit has grown 4 times during the same time. So it's a consistency which we have been in a position to deliver is what is great. Naturally, we are doing all our efforts to make it continue.
Right. Also on the guidance front, which is very important for IT and as well as an ER&D company, you have maintained the revenue growth organic guidance at around 18 to 22%, as well as the margin guidance at more than 20.5%. But as you rightly said, despite the ESOP cost and the promotional expenditure, which might weigh heavily on the margins, what other levers do you expect to maintain this kind of margin for the year?
See, I think the first quarter we have done pretty well. The second quarter, we are going ahead with our normal increments. We are not postponing. We are giving a normal, as always, best in line increments. Also on the ESOP cost, we will have a higher ESOP cost in the next quarter. So in spite of this, typically if you look at 2.8% additional expenses during the Q2, we have maintained the guidance both on an outlook on the top line and the profitability. So I guess it will be driven by the growth, operational efficiency, which we are bringing. And of course, I may say some of the high margin deals which we will be in a position to deliver. So basically, these are 2-3 points by which we will be in a position to achieve the margin.
Right. Okay, so let me just move on to the geography-wise breakup. You get around 28% of your revenue from the US, but US was a tad softer this quarter around. It actually degrew sequentially. You'd also mentioned about the challenges with the OEM trucks. So can you give us some more highlights, and by when do you expect the US segment to see a pickup?
So first, I want to give you the overall view. We believe Asia will be our high growth markets always, because it has some of the largest market, right? Whether apart from Japan, Korea, traditional market, China, India will be large markets in future years to go. So we believe Asia will continue with the growth at a high rate in foreseeable futures. Europe will continue its growth in spite of multiple challenges the economy is facing. US, we believe we have put in a lot of effort recently. The point is US has very less OEMs as compared to the Europe or Asia. However, we have broadened the base of the clients. Also the adjacencies which we talk about, which are more in terms of off-highway and trucks. With all this, we should be in a position to bring back the growth in the US. So there is nothing we are concerned about. The pipeline is good. Our discussions are good. It may take us some time because probably a little bit of under preparation at our side.
So do you expect the kind of mix around 28% from the US and 20% from the Asia? But Asia, as you said, is the strongest market. Do you expect the revenue mix to come more from Asia and less from the US going forward?
So, I mean, the way the industry is, right? Asia followed by Europe and followed by US. That's in the long term that will happen. I don't know when it will happen. I don't want to predict that, but I think that the fact is that's how the overall auto industry is and tech spends.
Right, right. Very, very true. Okay, moving on to the big question, which really intrigued me. The big IT companies are acquiring the ER&D companies. You know, HCLT acquired ASAP, Infosys acquired ESAP, and latest, just most recently, Cognizant acquired Belkin. So, how do you look at this kind of competition, wherein the big IT services are expanding their footprints into the ER&D companies and setting to acquire their competition?
We had to focus on what we do. Okay, so we are the only focus company which is focuses only on automotive mobility. The second part is arguably we are the largest in the world in this area. Our growth momentum is higher than anybody else globally. The investments which we are making are ahead of the curve. So we believe we are in a good position to take a higher share of business, is what we feel. But naturally, we cannot take any competitive pressure lightly. We do see the more competition coming from China, by the way, because the way the technologies these companies have, some of the companies are sourcing from them. So I think it's a global competition. I'm not looking at India or this. I think specifically, as you know, engineering services, anyway, earlier Europe has a very large dominant service providers. Indian companies are trying to catch up. We have established ourselves very well in Europe. We are established naturally here. So now we feel confident that globally we can be in a good position to capture the opportunities, bigger share of opportunities.